Eric Muathe, Muathe.com with US market analysis for the weekend of December 17th and December 18th, 2016. Let's take a look at markets here with about, let's say, 5 minutes before the close. And we can say it's been, for the most part, an unchanged to down day for the major averages. Let's take a look at those charts. We see that crude oil is up about 2% and gold is up about 0.52. Let's take a look at those charts. With the Nasdaq closing down for the week, we are looking at the possibility here of a market that is showing negative divergence, given that we've seen an improvement in week-to-week closing highs, but the RSI continues to make lower highs. That seems to be a problem for the market that is emerging right now. Keep in mind, we've been talking about the possibility of resistance. If you take a look at the Nasdaq using the 3-year time frame, so on the 3-year weekly chart, we've been talking about this line here connecting RSI highs coming into play. It's a simple line going back to 2014, and as of right now, it looks like the market did tag that line, and we seem to be pulling back. So that creates a little bit of a visual problem for the Nasdaq, probably one of the signs, or at least an emerging sign, that the market is now potentially, and it's potentially due for some type of a pullback. So that remains the view for now. Potential for pullback as long as we see the Nasdaq hitting this resistance on the weekly RSI and pulling back. In fact, we can see evidence of this on the Nasdaq daily. So the Nasdaq seems to be the first market, in my opinion, that is showing a crack. We can see here also that we've been making an improvement in price highs. But take a look at the technical picture, which has been showing that it has been making lower highs. Yet again, we see negative divergence, which sets the stage for a pullback. We've also been talking about the Nasdaq failing to move above the topside resistance line. And again, we've seen that this past week, the market did try its best to move above that line, but we've been rejected here on 3 occasions, and now we are starting to pull back. That suggests that without breaking above that line, chances that now we are looking at a market that is due to start pulling back. Now keep in mind, this also corresponds with the previous break line. So there's a line we've been watching over the last couple of weeks. This line continues to be relevant since the break here, which was a warning break. Since then, every time the market hits this red line, the market's been stalling. We hit that line here for the highs there. We had a slight pullback. We tagged the same line there with uniform activity for the highs there. And those were the highs before the market went on this shallow pullback. We are coming back, tested that line again recently. We stalled for a couple of days, and now we've hit that line almost thrice, and now we are pulling back. The assumption here is, yet again, the Nasdaq daily seems to be one of the major markets, or at least one of the major US markets, suggesting that the next meaningful direction could actually be to the downside. If we take a look at the Dow daily, now the Dow daily has been very stubborn, and of course we know why. The reason why the Dow has been very stubborn is because it has been maintaining its daily RSI above this level here. So the RSI has been holding above 69.1 throughout this period here. So right now we see the Dow ending the week with the RSI trading at about, let's call it 78. As long as that's the case, this market is going to continue to be very stubborn. In other words, it's not going to be easy to kill this market. So there we hear the bell for the closing of Friday's session. And again, as long as the Dow is holding above that number, holding above 69.1 here, don't expect the market to come off these lofty highs. Also, on the Dow weekly, as long as the Dow weekly continues to trade above 69.1, expect a very stubborn market. In other words, the market will be, at the very least or at the very worst, market will be stable as long as the RSI is above 69.1. We take a look now at the monthly chart, and another observation, as long as the Dow is holding its monthly chart above 69.1, continue to expect a strong to stable market. Now, if for some reason the market pulls back and is below 69.1, then that is when we can start really expecting some type of a strong correction. But for now, we are still holding above that threshold number. Expectation is market should continue to be stable, if not outright bullish. If you take a look at the Dow Hourly, and here on my hourly chart, I'm using RSI setting of 26. You can see why the market has been very strong. Go back to the RSI break. So this breakout right here began the nice upward trend to all-time highs. We take that information, draw a line from the breakout line or the breakout level. Oh, it should be slightly above that. We can see that the market's been bouncing nicely on this green line. Bounce here for the lows there. We bounced here with double bottom support for the lows right there. And now we are coming back to test that level. And let me explain where that line is coming again. It's from the previous resistance level. So on the RSI for the Dow, this was a resistance line previously, connecting the highs there, close to there, connecting all these highs. Once we moved above that line, all we do is draw a line from there, and the market's been using this line for support. If we were to break below this line, then maybe we can see a little bit of a pullback, but we ended the week exactly on the line here. So the market did end the week still very stable. We take a look at the S&P 500 weekly. We can see we've had a nice move to all-time highs week to week, but the RSI for now still is not showing a lot of improvement. In other words, this can be viewed as negative divergence. If that's the case, then we are seeing the S&P 500 start to show some signs of stalling. Also, just like the Nasdaq, for the S&P 500, we are coming back right now and we are testing this RSI top line. As of right now, we've been unable to move above that line. So as long as we are seeing resistance on this blue line, we can expect that the S&P 500, without moving above this line, if we continue showing resistance, that ultimately this is going to be good enough to bring the market for some type of a pullback. On the other hand, bulls would like the market to clear that resistance by moving above that RSI resistance line, which connects the highs going back to the middle of 2014. Just like we saw with the Dow, the S&P 500 still continues to be very strong. Even this RSI lows line still continues to be showing support. As long as the market is bouncing exactly where it needs to bounce on the hourly, we can assume that the SPX continues to be stable. So, in other words, in conclusion here, as long as the Dow, let's go back to that Dow daily. So as long as this Dow daily chart is above 69.1 on the daily RSI, expect the market to be stable. As long as the Dow weekly continues to hold above 69.1, expect this market to be stable, if not bullish. And as long as the Dow monthly continues to hold above 69.1, expect the market to be stable to bullish. Eric Muathe with Muathe.com. For subscribers, be on the lookout for part 2, which should have some ideas. Otherwise, enjoy the rest of your weekend. This is Eric Muathe with Muathe.com. As always, good luck, peace, and blessings. E-A-C-S. Woo! Yeah! Woo!